Hey guys, welcome to another weekly gold XAUUSD price analysis and prediction video. So as you can see from the chart and as expected, the slide below 1680, this one 1680, here you can see after the slide from this level, that is 1680 range, triggered further decline and the downward movement picked up speed once again. As you can see, we have seen a good decline. And you already know that recent macroeconomic data suggested that the Fed can and will remain aggressive about raising interest rates. Although the proportion of those with an interest rate hike of 100 basis point according to Fed Watch tool has recently fallen again and is currently below 25%. But you already know that 75 basis point is also a significant interest rate hike. And in addition to September expectations, it looked like that Fed will continue to raise rates for the rest of the year, and that weigh on the price of gold. You already know that people have liquidated a lot and moved to cash. They are really worried about a hard landing on gold. Now, a sustained turnaround in the gold price will probably only occur when the central bank signals that it is stepping on the brakes when it comes to raising interest rates, or you can say if macroeconomic data continue to crumble. In particular, the strong labor market gave the US Federal Reserve room to raise interest rates. However, the next central bank meeting will not take place until November, and if the labor market crumble in the meantime, this could be a first indication that the central bank will have to rethink. And technically an important support, you can see this one was the multi-year support, is now you can see breakdown, and we are currently trading below this level 1670. As you can see, this is the live chart. So what are the important level and what is the data from COT? We are going to discuss that. So we will move to COT, and this is the COT data that I have written here. Let me show you on the COT report. So this is the latest COT report that we have for this week on gold. So as you can see in the managed money, we generally look for managed money, and in the managed money you can see that this time also they have pulled money from their long contract. You can read this is minus 5542, and they are adding money in their short contracts. As you can see, this time 5833. So if we look to the previous number, let me show you. This is the data, because this time they pulled the money from long and adding money in the short. And if we look for the previous COT data, this was the same. They also pulled money from the long, but they added huge numbers in the short in previous COT report, and we have seen a very big decline. And this time we have the number same, that is the sentiment from the COT is same. Like we can say that the COT report is still bearish. So for this week the data from the COT is bearish, as you can see. And if we look for this chart, I already said this in another prediction video in previous week, I think, or before that, but let me revise that chart again for you. So as you can see, this is the net long position by managed money, the blue one, this blue chart. You have to look over here. So as you can see, this is at a very low point on this month. Before that, you can see we have a low over here, low over here, and low over these points. So whenever the net short positions in managed money fall to this point, sorry, net long position, because net long position is getting decreased. So this is net long position, this one blue one, you can read here. So they are decreased and they are at the lowest level, you can say, after this level, after 2019. So this indicates that whenever the net long position fall below to certain contexts, they generally stop doing that, and we have seen gold price raising from that level. So we can expect a rise in the gold price, but let me show you the important price level. As you can see, let me discuss the important support resistance in case of open interest. This is the open interest chart. So you can see currently we are trading at 1669, and below that you can see this level 1660. You can see here that we have a good number of put writing over this place. So this level can act as support. Below that another support is 1650. You can see good number of put writing, and this might act as support. Below that we have 1625. So if we break down 1650, we can tell, or you can say we can see a good sharp decline toward this level 1625. Above that we have the level of 1675, 1680. You know, the most important price level is 1680 right now. So these levels can act as resistance, and in live session we have seen that this level is currently acting as major resistance. So if gold able to break out 1680, then it can move toward 1695 and 1700. These are the levels on open interest that can act support and resistance. And if we look on the daily chart, this one you can see here, and it is clear from the chart, you can see easily that it is currently trading inside this descending channel, and currently it is below to major support, the support at around this level 1680. So overall we are in downtrend, and we can't expect a good bull run until the level 1680 is safe above. So if gold is able to break out on 1680, then we can think about the buy. Otherwise I think we have to look for the sell, because we have to follow the trend. Otherwise we have to wait for the rejection from the lower level, because overall the weekly candle is big bearish candle. Only we have this small you can say cover up in Friday trading session, and we have seen a bullish candle on daily time frame. So overall we have to think before entering into buy, because we are currently under huge selling pressure, and we have to wait for the data on Wednesday, and we have to look for carefully for that data, because currently it is under, as I said, huge selling pressure, and we have to take entries accordingly. So we will discuss more about these levels in Telegram channel in live session. So see you there. Thank you and good luck.